there's been a lot of focus of late on who's being affected by the virus crisis, and we all, top of mind are the airlines and the restaurants and the hotels, those places where people gather to spend their money. And there hasn't been a lot of attention, at least not in my world, towards the credit card companies. And having worked for American Express in the past and I carry a gold card, my wife carries a platinum card, I got to thinking, I wonder how they're being affected. And so I've done some research on it and put some thought into it. And I thought the thought process that I went through might be helpful to you. I recognize that there are three major players, that being MasterCard, Visa, and American Express, and I wanted to see how they have each been affected. As a result, and using today's price compared to their 52-week high, American Express is down 40%. That's pretty sizable. Visa, on the other hand, is down 22%, and MasterCard is down 25%. That's a pretty big variance from 40% down to 22%. And I wondered why. Why is the variable there? Certainly, it has something to do with demographics. American Express, I believe, probably has a higher socioeconomic demographic than either MasterCard or Visa. And that may come into play. I suspect that MasterCard and Visa are more attuned to lower income folks who are those people who work in restaurants and movie theaters and use credit as a way of moving them through their daily life, making ends meet. Whereas I believe, from my opinion, that American Express demographic is probably socioeconomically a little bit higher. First of all, I pay $250 for my gold card, and my wife pays $550 a year for her platinum card, and we do that because of the quality of service that we have gotten from them in the past, and so we believe it's beneficial. But I then looked at that and thought, well, which one is being affected today most harshly? Well, certainly business travel is gone. Nobody's getting on an airplane to go meet with some people in Chicago this week. And if they're going to meet with them, they're going to do it through Zoom. And will that continue in the future? Probably some. So that's a check against American Express, maybe both on the short term and the long term. Whereas I think the other thing that really comes into play, who's going to have the most defaults? Who's going to have to write off the most debt that people have gone into as a result of this crisis? If I've lost my job and I'm trying to put food on the table, I'm not going to hesitate to hand that grocer my credit card and run it up. Is there a possibility someday, maybe 90 days from now, I can't pay the bill? Yeah, that's a possibility, particularly if I'm in the restaurant industry where it's projected that 40 to 50% of the restaurants that we have aren't going to open. Now, on the other hand, if I'm a white-collar employee and I pay $250 to $550 for the use of an American Express card, I'm probably not in that default category. So I put a check against, a positive check against American Express for that. And then as I look at their numbers, the one thing that really struck me is their PE ratio, the price of their stock relative to their earnings. And I always think of this as how many years of earnings do I have to get to justify the price of the stock. Well, American Express's PE ratio is 11. So that means that it will take 11 years of earnings to pay for the $84 current price of stock, okay? On Visa, it's 32.7. So it will take 32 years of earnings to pay for the current price of 166. And MasterCard, it's 34 years of earnings to justify the current price of $257. That's a big disparity. So again, I'm leaning towards American Express in that regard. In fact, I have, over the last couple days, been buying American Express stock, and the fact is it's down even more today. So what I want you to do is, let's look at the charts and let's see if there is any more to be learned there. Okay, I want to analyze three stocks: MasterCard, Visa, and American Express. All three credit card stocks, probably the largest credit card stocks in the country. We're going to start with MasterCard, currently trading at $256 a share, has a 52-week high of $347 and a low of right at $200, $199.99. And what I've done is I'm at my favorite tradingview.com, and I've created a channel. I went back to 2016 and I said, this is the trading channel which MasterCard trades in. The dark red line is its 200-day moving average. And as you can see, it hit its low of $199.99 this year on March 16th, and then has recovered up to where it's trading today at $256. That represents the difference between where it is today at $256 and its high of $347 is a 25% decline in price. But I also want to point out it's within its trading channel. Okay, now let's look at Visa and see if we see anything very drastically different. Again, it's almost a repeat of the MasterCard chart. When you look at positioning within that channel, didn't probably have as severe a drop as MasterCard did, but it has a 52-week high of 214, a low of 134, and currently trading at 165. That represents a 22, where it is right now, at 22% off its high. Okay, now let's look at American Express. Again, a similar channel. We have some disparity here in its trading up to a high in December of 2014. But if we compare apples to apples and go to 2016, we see a similar channel. But here we see that the 200-day moving average has dropped outside that channel. Here we see a 52-week high of 138, a low of 67, achieved here again back in March the 16th, and a current price of 82.30. That represents the 82.30, roughly a 40% off its high. A 40% off its high. So my question is why? Why this disparity of both Visa and MasterCard down about between 22 and 25%, and American Express down 40%? And at this recognition, is there an opportunity? So let's talk about what that opportunity might be within these three stocks and how or if we should play this. And then if you're into this, I'm going to create a spreadsheet, like I've done in the past, of the financial data that I took from these three stocks in my comparison to make my decision to buy American Express stock. And I want to impress this upon you. I got a comment, or I got an email from a young man who basically said that he's new to the business and he's been visiting some of the Yahoo forums, and he actually got caught in a bait and switch type thing where somebody was running a scam on a stock and putting out false information, and then you got to buy in now kind of thing, and he lost basically everything he invested. And what I want to, and then I also get a lot of emails touting some motley fool. They put out a lot of good information, but then they also end their information with, and we got 10 stocks that we think are better than that, and click here to do that. And what they're going to try to do is sell me a service of giving me their inside information. And I look at that and think, what in essence they're saying is, rather than you do the work, we'll do the work and we'll charge you for it. Well, my statement has always been, if you've got that good of information, you can make a lot more money trading the stocks than charging me $29.95 a month for your information. And I may be wrong on that. That $29.99 may be far more, and it may be far more lucrative. But either way, it comes down to you're transferring the work to them. You're not willing to do the research to make a good decision. And if you're approaching investing that way, get out of it. There is no easy way to make money anymore. There's easy ways to be taken advantage of. There are easy ways to be abused, such as the forums that you've been going to. But if you will do the work, if you will look at this, and I was watching something today, and Barry Diller on Squawk Box, and he was asked the question. He owns Expedia, and as he said, we got no revenue coming in, but we got a good balance sheet, and we're going to benefit from this. And Andrew Ross Sorkin asked him the question: are there any opportunities in this? What's happening? And his comment was, "Oh, hell yes. We're right now spending much of our time maybe improving the way we do business, but looking for opportunities. There are going to be a lot of companies who aren't going to survive this, and they're good companies. They just didn't manage themselves well. And I'm going to take advantage of that." Those were Barry Dillard's words. And I want you to put those words in your head. There are opportunities. I happen to think American Express is one of them. And I will share my analysis with you at bestofusinvestors.com. For those of you who signed up and were looking for the information I put out on 5G stocks from the Wall Street Journal article, I just sent that this morning, and that should be in your mailbox. And if you signed up for it and you don't see it in your mailbox right now, go to your spam folder. It might be there. So American Express is now in my portfolio. I'm sorry to say that one of the biggest benefactors of this crisis, Amazon.com, I didn't buy. I just kicking myself that I did not buy it at $14, and then I did not buy it at $1,600, and it's now at an all-time high of somewhere over $2,300. I think I'm going to get an opportunity to buy it again, because quite honestly, I think it's going up because there is a strong belief that they're still doing a lot of business, and I'm sure they are, but I'm waiting for their earnings report. I think there might be some disappointment, and I measure that strictly on the fact I don't see as many of those gray trucks in my neighborhood that say Amazon on the side of them that I did last month. I'm not sure what they're delivering right now, gloves, sanitizing equipment, is as profitable as some of the things that they used to, computers printers and cameras and lighting equipment and things like that. I'm not sure their profits are going to live up to expectations, and I could be wrong, but I'm in the back of my mind, I'm hoping that their earnings are a bit disappointing and I'll have an opportunity to buy in, because truly, if you look at who are the benefactors of what's going to happen, right now Google and Apple. I told you in my video yesterday, they're putting a tracking device on your phone. They own 80% of the phones in the world. That is either an Apple phone or an Android phone. They're the benefactors. What they're tracking now, who has the virus and who doesn't, is just the beginning. They're going to find my video on smart toilets and smart bathrooms. They are going to be enormous benefactors. So you need Google and Apple, but do your research and start connecting the dots as to why this is happening and who are going to be the benefactors. There are always benefactors from beneficiaries from whatever happens, and this is probably the biggest happening in your lifetime.